Well, financial repression is eventually what this leads to. It's the idea of forcing some of your financial companies, and whether it's insurance companies or what we've experienced in the 1940s and in previous bouts of debt overhang in history. But I wanted to pull on a thread that you mentioned there, which is I think it's the biggest issue today, which is the energy crisis in Europe. The U.S. has been using the Strategic Petroleum Reserve to some extent. I think to some degree, in the run-up to the midterm elections, there's a very political angle to all this. So I wonder how much more they're willing to deplete the SPR after the
15 million barrels this week.
Yeah, exactly. And now they're saying that they might extend that even further. So there's a big question there. But to some extent, the whole dynamic that we're seeing in the bond market in the U.S. and in Europe is very much predicated on the price of energy, and it's gone haywire in Europe. The U.S. has this escape valve, but if we do keep rising rates and trying to affect demand, which is essentially what they're trying to do, oil prices and natural gas prices are still going to be oscillating depending on these other variables, right? You have geopolitical risk, you have the lack of investment in the space, you have ESG kind of dominating the expenditure of capex towards energy. So, to what extent could this affect your thesis, the energy prices both in Europe and in the U.S.?
Well, I mean, I think it's a factor. I wouldn't want to sort of put so the reason I say it's a factor is because a lot of the inflation we're observing in the U.S. economy has very little to do with energy at all. In fact, if you look at headline CPI, energy inflation is tracking down 40% on a 3-month annualized basis. We're at minus 45%, and we're still dealing with 6, 7, 8, 9% core inflation pressure, whether you look at core CPI, core services, shelter services, less rent of shelter. So to me, I think energy is a big factor structurally, longer term, in terms of this energy transition and the kind of energy insecurity that it seems like we're walking ourselves into by feuding with Saudis, obviously beefing with Russia and China. But these things aren't going to go away, and so understanding that these things aren't going to go away, in my opinion, is an issue for the bond market. In terms of the thesis, right? It's an issue because it ultimately means that policymakers, because we're in this fourth turning era where inequality is really driving populism from a political response perspective, you're going to continue to see policymakers opt for the kind of the green button. The red button is shut it all off, destroy the economy, get inflation down, which is what the Fed is trying to do. But the green button in Brussels and in DC, which is, let's actually just spend more money and help the consumers deal with this problem, which obviously makes the problem worse over the longer term. So going back to tying this all back to, the decisions you should be making as an investor in your portfolio, again, I keep saying this, like, I don't understand why so many investors have been in a rush to buy fixed income securities. I mean, we dipped our toe in the summertime. I think we bought, the EDV or something like that was like the 30-year treasury, had a nice little trade on it to the upside, and then was like, I think this is over. We saw that September CPI reprint, and it just was like, no, this is it's going to be a long time, not time in x-axis terms, but more, we could potentially still be a decent ways away for the market finding a clearing price for a lot of these global sovereign debt securities. Just the reality is that I think that we all understand, going back to that structural inflation model, maybe whether you have a very sophisticated model like that or not, we all understand that there's going to be more inflation on the go forward basis than the kind of regime we've exited. And so I think just finding a clearing price for that is still kind of the key driver of financial markets right now, which is why we can't find.